Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitri Pardamanik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your RIA, call your broker. That's what they're there for, to give you advice, provide you guidance.
There you go.
Disclaimer. Okay. Let me share my screen real quick. If you guys are joining us for the first time, just to explain what we're doing here, we do this show really to answer any questions you guys may have about Market Chameleon tools, data, analytics. If you wanted to discuss strategies or something unusual you've seen, you're welcome to ask those questions or come on the show and ask those questions. And the two ways to do it is put your question in the live chat. Will's watching it, he'll read it back to me. If you want to come on a show live and ask your question, we also provide a link to Zoom. Click on that link, takes you over to Zoom. Once you're in Zoom, there's a button, raise your hand. Click on that. You don't have to turn on your video camera. Once we let you in, everybody could hear you. You could ask your question direct. Today, what we'll do is go over the pre-market report real quick. And if you guys do have questions, I'm going to try to answer them. Will let me know. We did get a question in an email, and it was regarding our option order flow sentiment and to explain how to determine a buy versus sell order. Okay, I'm going to go over that today. It was from a customer. I think trying to learn this, I got a few questions from this customer, and actually, I really appreciate the question. For one, I see he took time to give me snapshots, showed me what he's looking at. That helps me a lot. Also, I appreciate it because you want to learn, right? You want to understand, you want to learn and understand what's going on and why maybe our analytic is different than what you might be seeing somewhere else. So, and that's going to happen a lot. You might see our analysis or interpretation that will be much different than what you're seeing somewhere else, because we don't know what other people are doing, and they don't know what we're doing, because our algorithms and our interpretation, don't go into their systems. So what we'll do today is I'm going to show you the example that was emailed to me yesterday. We're going to go through it deeply, take questions if you guys have questions, and try to answer it and kind of do a walkthrough in detail. Here's a trade. This is what happened. Now let's analyze it from different perspectives, okay? From not just a simple observation, but let's do a deeper analysis, go use more information and tools that are available to us to understand actually what happened, okay? So we're going to move beyond a simple observation, okay? So that's what we're going to do today. Before we get to that,
hey,
let's start. Yeah.
Before even you get to the pre-market, I do have a question popped in about the order flow sentiment from a regular Baiju.
Okay.
You must have seen the title. Do you want me to give it to you before you start, right now, or?
Yeah, tell me right now.
All right, Baiju, he starts off, hey guys, I had a question around this order flow sentiment as to get to how do you decide if it is a buy or sell based on the bid ask? But what if the trade is at mid? How do you bucket that into your analytics?
Yep.
Because you do then further your call based on the premium RE bullish bearish sentiment. So I guess he's curious how you look at midpoints.
Yep. Okay. So that's a good question, and that is something that we will be covering in today's analysis. Okay.
Perfect.
Because I have a specific trade that was emailed to me, right? So very, it's kind of a detailed, specific trade in a specific stock. So we're going to go over that today. And that will, I think also answer the question that you just read. All right.
All right. Can't wait.
So really quickly, pre-market report. These are stocks trading pre-market hours. We take a look at this just to get a sense of what's going on today. So you could see these pre-market. We have 3 lists, our most active lists. These are remember stocks that are right now trading in pre-market hours. We have our biggest percentage gainers, biggest percentage decliners. Here, 66 stocks made our percentage gainers list, 35 on the decliners. From this perspective, looks like a bullish bias at the open. However, if you look at the list, you'll see that this list contains small cap stocks, ETFs, leverage products, preferreds, anything that's listed on the major US exchanges that are trading in pre-market hours and meet our thresholds. So we want to narrow down this list to a group of stocks to get a little bit more insight. What we'll do is narrow it down to the S&P 500 companies. And I'm going to do that, use this filter here in ETF. When you click on it, you get a list of different ETFs to select from. The top one, SPY, is the S&P 500 ETF. So when you choose that, the list below will get filtered by stocks that are holdings in that ETF. Okay, so these are the S&P 500 constituents. Here we got 5 on the percentage gainers list, 8 on the decliners. That shows a little bit of a different picture, slightly bearish bias at the open. Keep in mind today, the Fed meeting today at 2 o'clock, they'll make an announcement. They're going to give us some clarity or picture of what they're seeing and maybe some forward-looking statements. That's going to be important coming at 2 o'clock today. Is that correct? Well, 2 or 2:15? I think it's 2.
Yeah, it is.
Right. Let me, just to save time, I'm going to jump to this question because we're kind of already, already 8 minutes in. So the question was here, I'm actually seeing the stock MTCH. Okay. So MTCH, let's go here. And yesterday, they were looking at here, the option order flow sentiment. It had a positive imbalance of 513,000 deltas. In other words, that when we looked at the trades, how do we look at the option trades? We look at it from the perspective that there are end users, there are dealers and professionals. Okay. So there are end users that could be using options to, express a direction. Then there are dealers, and even professionals that are using options really to trade the volatility, implied volatility, buy them low, sell them high. And their objective is to balance their book. So to balance their book, to manage their risk, when you do an options trade, one of the risks is direction. You got gamma risk, you got your vega risk, you got rho risk, theta, all that. But you also have direction risk. If you sell a call, the stock goes up, you're going to lose on it, right? If the stock goes down, you'll make on it, but you do have directional risk. And that directional risk, you could hedge off by buying or selling stock, depending on your delta. You could buy or sell the underlying stock to get yourself to delta neutral. Okay. So that's what this is right now looking at, would be how much net deltas are coming in or out, forcing a potential hedge. Now, the dealer doesn't have to hedge, but theoretically, if you want it to be delta neutral, and if our interpretation is correct, this is the amount of stock they would need to hedge at the point of trade. Now, keep in mind that this is looking at the pressure at the time of the trade. This does not mean that there's going to be bullish pressure tomorrow or 1 week from now or a month from now or a year from now. This is saying that based on that trade at that moment, right? At that moment, this is the pressure it would have created for the dealer to say, okay, I need to buy X amount of stock to get myself to delta neutral and take off that directional risk. All right. So it's not a prediction where the stock is going to be tomorrow or anything like that. That's important to understand. We're just trying to figure out what's going on. Okay. We're looking at the options chain. All right. When you're looking at the options chain, you got all these different options trading here, volume all over the place, right? So we're trying to take that volume and try to make sense of what's going on. So let's come back here. And we come down here, and the top one, right here, we have the top 10 option contracts. So this was the question. And Demetrius said, okay, this top one created a lot of pressure, bullish pressure, meaning positive pressure on the dealer that they would have had to, if we're correct in our interpretation, remember, this is interpretation of what's going on. We have to look at the surrounding data and interpret what we think is going on. And so the first snap shows, okay, the user correctly identified, yes, this here, February 3rd, 48 call, something must be going on here because our algorithm is detecting that there's a buy pressure coming in from this option. Okay, a bullish pressure or a positive delta pressure. So then the next thing, okay, and then the user identified that, came over here to the options chain. I'm just kind of going through the snapshots and said, okay, Dimitri, I found this option right here. Here's the Feb 3rd, MTCH, right? 3 business days to go, and I see a lot of volume here, 7,000, right? So there's 7,000 contracts traded on this option. Opens it up, looks at the time in sales, and says, what is he expecting to see? Well, somebody's coming in and buying this option to create that pressure, right? But this is what he actually sees. He sees a trade price of $6.95. So these are the big ones, right? Here are the big trades. So he correctly identifies them. Here are the big trades. But what do I see here? Look, here it traded at $6.50. But if I look at the quote, it's $6.50, $6.55. So if I compare the trade price to the market quote, it looks to me like somebody sold a call on the bid. That's what it looks like, right? This $6.95, somebody sold an option on the bid. Okay. All of them kind of look like that, right? So what is the interpretation then? Something like, well, the algorithm is wrong. It didn't actually pick up that these were sold on the bid, and actually a user selling this to the market maker. Okay, so that's the question, right? Now, one thing if you just look at that observation, right? If you just look at that data alone in isolation without looking at anything else, well, that's the only interpretation you can make, right? Because you're not looking at anything else, right? You're assuming there's no Black-Scholes model or implied volatility, that the bid-ask spread's always like this, that every quote consists of a market-making quote and there's no limit order book. In other words, nobody is putting in limit orders. They're always either taking the offer in the bid. So you're making a lot of assumptions, which is a problematic. And I could understand why, if you're just looking at that observation, right, and you just want to come to that conclusion, if that's all you want to consider, it's the simplest, cheapest, easiest way to make an interpretation, because you don't have to dig in any deeper, right? That means you don't have to worry about really analyzing any more data than that. And look, this is not telling you the entire picture. Okay, it's not telling you, well, how do you know somebody out there is not putting in a bid because they're trying to get a better price, right? So the rules are you could put in limit orders. You right now, as a trader, as a retail trader, anybody could put in a limit bid and you don't have to pay the offer. Okay, you could always try to get a better price. As a matter of fact, it's your job to get a better execution. A good trader will always try to get a better execution. And if you're putting in a limit order in between a market and it doesn't get executed immediately in the, it has like a 1 second auction. If it doesn't get executed immediately, what happens is it gets placed on the limit order book and it will be displayed just like a quote. It will look exactly like a market making quote to you because that's what it does. And once it's displayed, the 650 is displayed, that means now anybody who thinks, hey, there's a buyer there, that volatility is pretty high, 102 volatility, it's pretty high. I may sell it and just hedge the stock. I don't care about direction, but the volatility is good enough for me, a professional or even a market maker can decide to do that, or a market maker on a different exchange can decide, and I'm just going to sell it and hedge the stock. Okay. So if that happens, then there'll be buy pressure on that stock because whoever sells it on that bid will turn around and buy that stock. Okay. So remember this, we're looking at the immediate pressure that this order would create. So far, everybody with me? Okay. What we're looking at when you're looking at a bid and quote, and you could see here, let me show you how these quotes look right now. Here's the quotes. You could see it's 30 cents wide here. You could see that these quotes are pretty wide. They're not usually 5 cents apart or 10 cents apart. You could see, this is 30 cents. This is 35 cents. You could see all these quotes are wide. So the first clue is that, when it tightens up like that, something's going on. Somebody's putting something in between. So let's do a check. All right, let's just do a check. What are we really looking at? Is this creating a buy pressure, right? Because this is a lot of delta here, what we're talking about. That actually was a lot of delta, right? Starting around, 1025, something like that. You could see here. All of a sudden, 1025, 500 traded at 630. 1026, 645. 1026, 650, 650, taking it up, 695. So what's going on here? I mean, is this really creating buy pressure on the stock? Well, why don't we check? Why don't we confirm that part, right? Let's go take a look at the stock and say, is it really, because right around here, right around this time, if this is a lot of deltas, more than usual, right, we should see some indication that, hey, the volume around this time is picking up and the volume looks like it's ticking up from previous prices. Does that make sense to everybody? Because that's what we're really interested, right? Is it creating a pressure on that stock? So if there are more buyers coming in, we should start seeing volumes ticking up. We should start seeing like uptick in prices as well because more buyers and sellers. So let's come over here. All right. This is yesterday's. Let's go back to the VWAP. So this is MTCH yesterday. This is the minute-to-minute VWAP prices. So this is what the stock did yesterday. I wonder why this isn't. I think this rolled over the stats. So this part of the website is starting to change. So this is going to look a lot different to you guys. You'll be able to do more analysis from here. But let's go back to what did I say? It was like around 1025. Well,
Yeah.
okay. So look at these minute to minute, right? Look how much it's trading. And then all of a sudden, right around the time of those trades, I think it started like at 1025 when, 1031, I think, remember I showed you it was up ticking up. So what's going on with the stock? Is it creating the buy pressure? So here's the stock. And then all of a sudden, what's going on here? This looks unusual, right? Doesn't this look weird to you? These 2 minutes? Doesn't this look weird to you? That all of a sudden the volume's ticking up 2 times its average, 3 times its average. And what is it doing? These are the ticks, right? These are the ticks. These are, if somebody's hedging, right? If we're right and somebody's going in there and hedging, the volume, look at the number of trades, look at the volume, and what are they doing, right? But we could continue to confirm this. So this is an indicator that do you guys see the volumes and the upticks, right? We're going to the underlying, we're checking ourselves with the spot price. Do you guys see that? I'm picking the same times that these options traded. All right, I think it was 1025 and 1031, but we'll go back, right? So we're seeing volumes increase, upticks in prices, okay? Let's go back. So remember, our algorithm is like trying to look at all these things, surrounding data. It's going back in the options chain. It's doing a bunch of stuff. So let's go to, what was it at around 1030? It was like around 1030. I'm going to go to the options chain back to like around 1030. Right? It was, I'd have to go to 11, right? It was after 1030. All right, so let's just take a look at this again from this perspective. Go back here. The original trade starts like 1025, I think it started. Actually, I don't know, even earlier, 1024. Okay. So let's look at this original trade. 610, 615. The stock is 53.48, and you could see as it trades, the implied volatility is moving up, right? So it's actually, I think he's bidding even up implied volatility and bidding up the option itself, right? I mean, everything's going, the stock, the option price, and the implied volatility. You see that? See where the implied volatility was the day before to the day after, 91 to 100. But let's take a look at it from this perspective. So if you buy it, the option 48, right? I'm sorry, the 48 strike for 610, right? 610. And the hedge price is 53.49, right? So 610, 53.49. Synthetically, the buyer of the option, let's just forget about the cost of carry for now, right? It's only a couple days to go. But I'm doing the math in my head. What's 48 strike plus 610, 54.10?
What was that, D? I'm sorry.
If I add 610 to 48, that's the strike price is 48. Add 610 to it, right? That's equivalent to buying the stock at $54.10.
10 cents. Yeah.
Right? But if I hedge it 1 for 1 at 53.49, that's 61 cents over, right? In other words, synthetically, I'm buying a put for 61 cents minus cost of carry. But let's ignore the cost of carry right now. Well, is that a good deal synthetically to buy 60 the 48 put for 61 cents? So let's take a look at that. Well, the 48 put is offered at 51 cents. Basically, right? Where's the stock here? 54.30. So let's go back to 10:30 maybe. So at 10:30, the 48 put was offered at 59 cents. So it's like paying the offer or more, right? So you could see here, put call parity, right? The seller of that call could have just turned around and bought that put and created an arbitrage opportunity. In other words, that somebody was creating a buy pressure and it was a good sale for a professional, for you, for me, for the market maker to sell it and just hedge it. And you could even arb it by, and some people were arbing, right? Some people were probably, you could see the volume here. We're just going in there, perhaps bidding up the put right here, right? They started bidding up the put. So going through all this, and we're almost at the end, I'm just showing you some of the things that the algorithm is doing to try to ascertain what's going on here, right? Yes, it was trading on the bid, but you could see here, here's the market, $6 to $6.60. You know, when you put in a bid, when you put in a bid in between the market, it will get posted, right? And once it gets posted, then everybody could see, and your electronic market makers, your electronic professional traders, your electronic retail traders are picking that up and saying, hey, I could sell this and hedge the stock because this guy just wants to buy it. He doesn't care about volatility. He just wants that option. Just like here, look, see here, this is indicating to me that somebody left an offer on the book. This isn't a market maker offer. This is a limit order book, right? And that person is trying to sell his delta. Okay, he's just sitting there, right? So hopefully this explains a little bit in more detail that what are we trying to do is figure out not, order flow set. It's not where the stock is going today. We don't know that, right? Nobody knows that. Nobody knows what the earnings will be. This is earnings, right? So nobody knows until nobody should know, right? Legally until it comes out. What we're trying to see is like what's going on in the markets and what type of pressure do we think it's creating at the moment of the trade on, on the dealers or people who are trying to balance their book. Okay, I'm not sure if the person is there who asked the question is still there, but I hope that makes it a little bit more clear.
Yeah, that was a great explanation. It's a full webinar. It was awesome.
Right? So what do we look at? Put call parity. We looked at how the implied volatility changed, how the trade progressed, what kind of pressure did it create in the spot market. We looked at, and the algorithm goes through more. I think there were like up to like 50 checks. It's looking at bid-ask benchmarks and all that. But the point I'm trying to make is that there's a lot of surrounding data to take into account to try to interpret what we think is going on, right? Like, what do we think is going on with this trade, right? Yeah, we could look at the trade in isolation, say it traded on the bid side. But when you start looking deeper, you're getting a different picture of what is probably happening. Okay.
All right. Great
Hopefully,
job, my friend. Another great episode. You have a great trading day. It is now open in bell. Any last words for the chameleons?
No, guys, thank you so much for the question. Really, I do appreciate the question. Especially, thank you because you also gave me screenshots and showed me what you're looking at. And that makes it a lot easier for me then to focus in on the example and go into detail. So I appreciate the question. Hopefully it was helpful. Let me know if it wasn't, or if you have other questions. But yeah, everybody stay safe out there. Have a great trading day. and I hope to see you guys tomorrow.
All right, trade in peace, chameleons. Have a great day. Thanks again, D. Bye.
Bye, everyone.